All right, lots of things going on in the real estate world, hence this episode of Real Estate Chat with Robert Eid. And
Jonder Perez.
we're going to dissect what's happening in September. And if you're lost in this current market, expecting it to do something that it's not doing, sitting on the sidelines and waiting for how much longer rates will drop to eventually bottom out at some point, or just have a question about affordability and being able to buy. That's what we're going to be talking a little bit about in today's episode. So, Robert, let's jump right into this because you've prepared some charts which everybody can see a closer version of at www.unclebobexplains.com. Is that right, Robert?
That's right. So we'll have the video there as always, and then these charts following down. So if you want to expand it, you want to look closer, you want to see exactly what those small numbers are, then that's the way to do it.
Perfect. So that's where we go. Let's start with the sales. Robert, what's going
Okay.
on with September sales?
Well, sales are still lousy. If we go down to the very bottom in the red, we see that it's the 26th best September of 29. So we're not setting any records, but compared to where we were 2 weeks ago, it's much improved. So we go up to the yellow at the top and we see, okay, 4,531 sales. And again, it's gaining. There's a box in there that says it was 183 sales a day last week. Now we're at 226, which is like almost a 25% improvement in 9 days. So I'm going to say that the first half of September was quiet, and the second half of September is edging into what the fall is going to be. We may have a razzle-dazzle October. It may fall flat. Everybody is now anticipating, and I guess that's really what we're talking about today, is that's the past. What's the future? Everybody is anticipating something from the standpoint of what suits them best. And so we'll look at those categories of buy sellers of the market individually in the course of today.
Now, not to give anything away, but is there a reason why? I mean, in previous years, in the good years, and for those of you who've been watching our channel, make sure you like and subscribe if you're new here. In previous years, we've reviewed, a sort of a momentum building up into the fall market. So we would see, for example, by mid-August, that momentum picked up. Now, the odd thing is this year rates have been dropping up until recently, up until September, rates have dropped. And yet everybody still seems to be taking an even more cautious approach. So, Robert, why did things pick up? Was it because of the rate drop, or was it just because that's just the way fall market works? Why didn't we see this momentum spark in August?
Okay. Well, the price and the sales work in tandem, but they work separately. When to show it on a chart, you look at the sales chart, like this one, which is the sales chart. You look at the 10 and the 5-year average, which is sort of pink and puce, whatever that color is, and there is a little bit of a rally. But in order for it to be average, that means sometimes it is and sometimes it isn't. It means that the summer is the slowest time. Now, everybody, to answer your question, is anticipating trying to buy at the bottom. Now, the bottom will be the lowest possible interest rate and the lowest possible price. But we know there's an inverse relationship between those two. And so that when the interest rates are at the lowest point, smarty pants will have already bought 60 days before that, picked off the low-lying fruit, picked off the individual who just absolutely is compelled to sell. And so you're going to be left with market value listings. Now, that's okay because you don't want to overpay. That's the overriding motto of most people who are buying now. Okay, prices went way up now, and if they do go up, I want to beat that. But if they do go up, then I want to make sure I get the very lowest rate. So they're trying to balance all these things, and they're forgetting that it's not a stock that you're buying, it's buying a home. And the home is where you live. And you try and buy the best quality home for the price that you have the ability to pay. And so each one of the segments of the market, right now, there's no investors. If you have a triplex, nobody is looking at it because they think you want too much for it and the rents aren't, because you have old tenant rents in there and that's all bad. So there's no renters, there's no investors buying right now. So that's one whole big segment that was pushing the prices up during the low rate period that just are not there. First time buyers are sitting on the sideline unless you're bending over backwards to give your place away. They're saying, well, I'm just going to wait for that interest rate to get down a little bit more. And the fellow who I kept on saying his name wrong, Robert McLister, who writes in the Financial Post and has a business called MortgageLogic.com, the mortgage broker said, when the 5-year fixed gets into the threes, starts with a three. So right now we're at 4.25. And the competitive competition between major lenders, you can get, if you're a good qualified person with a good down payment, you can get that down into the threes, 385, 375. And so we're there, which means that gradually the variables are going to come down. We're not going to get down to .75, .85, 1.25 that was fueling the huge big boom of the COVID time, but that was an interest rate overshoot. Interest rates should never have gone below, for first mortgages, 3%. Should never have gone below, but they did because it was an overcompensation. They're trying to make the whole economy drive through real estate. And well, it went too high.
Well, there you go.
Now
So
it's come
question
down
of
a bit.
affordability and timing basically is what we're looking at. Now let's talk about prices because I mean we've
Okay,
seen
so
how
here's
seasonal.
where the thing you're talking about, the fall
Yeah.
rally. So I simplified this chart by taking off everything below $500,000. And we're anticipating what's going to happen, that if this month of September follows the trend from the last 23 years, in 22 of the previous 23 years, the market went up, prices went up from August to September, and the average of that was 4.17%. So I put 4.17% on top of last month's uh, price, and lo and behold, we get 1,118,906, which is sort of in keeping with the trend we said was already happening, that 2024 was following 2023's pattern almost exactly. So I don't think we're going to be far off here. If 1% is $10,000, it's very easy to be off a little bit. I don't think we're going to be off very, very far. And I filled in a few of the blanks that I haven't done on there. Right now, we're 16.16% off the very, very peak. So we see the very, very peak over on that's it. So we're 16% off that. And we're 1.5% off the top September, which you can see just lined up there. It's a little bit above us in the purple. A year ago, we're at 0.05% change. Who cares about that? As I said, 16% off the market peak. In the previous 12 months, the highest price was a few months ago, and that was 4% higher. So we've said we're going to go up 4% this month. So I think we're not going to be too far off because we've done this without thinking about anything other than what happened in the past as the basis for our projection on what it will be. And that is the third highest September. So they're all bunched up in within $20,000 of what the best and what the worst, top five. So I think it's going to be right in there, and we're already expecting that. Now,
Yeah.
there's going to be a breakout one of these
Mhm.
days. Interest rates are finally going to say, people are going to say, well, I can buy that one. Because what we have now, this is the thing, inventory. We got a huge number of inventory. And I thought it was going to get eaten up, but there hasn't been enough sales to eat it up. I thought there'd be a number of people withdrawing their property. They're saying, no, I want to move. I want to do what I want to do. So here, either I'm dumping a bad investment or I'm selling this thing if I get the right money. So it's just sitting there languishing at a price more than what people want to pay. Or um, I want to buy something else, but I'll only buy that something else if I can get X plus 14 for mine. So there's a lot of people that are not A1 deadly, gotta sell it, desperate sellers. They're just see what we get. We know there's a lot for sale. We're taking it easy. Nothing goes by the middle of November. We'll take it off and we'll try it again in January, February, which is, you can't say anything wrong with that. Okay, you're just taking it easy. Just take it easy. Go ahead. Sure, no problem.
Yeah. So stable prices, I mean, following along with the pattern, no surprises here.
Yes,
Disappointing
not
for,
dropping prices. That's
yeah,
that's going to be
exactly.
the final motivator. If you've
Yeah.
got prices, rates down as low as they're going to go, and prices not going down, then there's no reason to wait. No, people will try and wait, but you don't have infinite patience if you've got a 5-year-old going to start in school in September. You got to do
I mean,
something.
you can wait till middle of winter if there happens to be somebody motivated enough to sell it at a
Yes,
price
yes,
that's
yes. And that's what you should be out there
deviating.
doing, looking. Look at everything and look for how long has it been for sale? All the iterations of the listing, add them all up, find that out. And what's the possession date that would be absolutely ideal for that seller? And do they want a fast closing? If they want a fast closing, they got a good reason. But
Yeah.
maybe you don't want a fast closing. So it's again the negotiation of how much and when is what every offer negotiation
Yeah.
comes down.
Good prices and good good houses in good neighborhoods will sell for good prices. So if you're one of those in the school of thought of let's wait till prices dip a little bit, or I want the lowest price for a home, well, follow the seasonal patterns. I mean, this is not a crystal ball, but it pretty much reflects what will happen. And so if you're anticipating to pay a low price, wait till December, January when you get the most motivated sellers. But just beware, because if we are at lower interest rates then, you're not the only one thinking that way in terms of wanting to buy at a low price.
Everybody's anticipating, everybody wants to outsmart everybody else, and guess what? Everybody can't win.
There you go. So let's look at inflation, because the good news, Robert, is that inflation has been tamed. The bad news is, I keep messing up this word, cumulative.
Well, that's the word, cumulative. And
Cumulative.
it's the good news for interest rates is that they have come down in the United States, but they've come down in the United States more in a chunk than we expected after them doing nothing. So are they behind? Were they undershooting? Now they're overshooting. I don't know. What are they going to do in Canada? Canada, if we have a cooked, like if you really look at how they break down the CPI, which in itself is an adjustment of an adjustment of an adjustment of an adjustment, the 2% is an average of big housing is contributing like 5-6%, and other things that have gone down. Gas went down. There's everything that comes down. So 2%, that's their target, they say, but that's an average, and they haven't reached it. They can't duplicate last month, this month, and what they just announced was what happened in August. Now we're already looking in the front window, not the back window. But everything we're talking about has got 18% on top of it. You know that when you go and buy eggs. Everything in the real estate business, if you just talk about inflation, never mind preference, never mind demand, never mind anything, you got 18% built into it just from darn old inflation. The diminution, the opposite of cumulative, diminution of the purchasing power of your dollar.
So we have to remember that relatively it has dipped. Cumulatively, it's gone up still. So we're still
got
fighting
every
that.
other year's added on top of it. And this is just
Yeah.
going to August of 2020, we're adding right.
That's right. Yeah. So that's interesting to note. And let's look at inventory, because in our past episode, September fall time, you should see an increase in inventory, yes, seasonally. But when we recorded that, I recall that we were already at pretty much, 23,500, 24,000 inventory. We saw it dip a little bit, Robert. So we were watching that. And at one point I saw it hit 22,800, 22,900. Now we're at 25,000. And as you
Yep.
alluded to earlier, part of it was the result of, of course, the fall market naturally bringing in more listings, but the sales weren't quite there in the first half of September. Now we're sitting at 25,000. Where is this going to go?
I thought it was going to dip down. It's just more listings keep coming. So we have a built up non on the market inventory of, if I can get this for this place, I will sell it. I have a tenanted property. I think you have everybody unloading what they don't want. And well, you just look at the listings. So far, there is a tremendous number of freehold properties in both 905 and 416 come on the market. The percentage change in 6 months ago and 18 months ago, the two springs, are a reduction in the amount of condos coming, new listings and sales. Freehold and 905 is what's selling the most. But this is inventory. Inventory, well, I've said it before and I'll say it again. 25% of the properties that are for sale should not be for sale. They are not serious about selling. They are not priced for today's market. Anybody who looks at, that's why they get nobody looking at them, because shrewd buyers are just saying, give that guy another month to realize that he's crazy. Nobody's stupid.
Yeah. So, and we're sitting on almost 6 months of inventory.
No, sales have gone up since I did this just a couple of days ago. Okay, so I was projecting 4,400, now I'm projecting 44, 45, 31. So we got 5.6 months of in for the same general category, but much above what our 5-year or 10-year and even our 16-year was.
There you go. Now, this is something that they're going to need to
where we
visit your
talk about
website
where's the action going. These arrows, you won't be able to see this until you pick it up. But we're 100% of the listings in the last 4 years, equal to 100%. So this is the greatest number of listings there's been in 4 years. The next one down is 24 months. We're 147% of what is the average of the last 24 months, 120% of the last 6 months, 107% of the last 3 months, 100% of this month. So it's building still. If we go down, we see that 30.73% of the sales are condo. So that means that 69.3 are freehold. And we go down to the next one, we see that 31.6 are in 416, which means that 68% and change are in 905. So freehold in 905 is where the action is. And then the ones down the other side, you got to be a real aficionado to care about that. But you can look at it and see that compared to 6 months ago, 12 months ago, and 18 months ago, 6, 12, 18, and 24 months ago, where the different change in listing inventory was and where the different change in sales inventory. But
Yeah, so for those of you
we've
who
sort of
like
summarized that already. Yeah.
yeah, so if you like dissecting these charts, visit
That's right.
www.unclebobexplains.com. If you want the simple version of it, just look at the highlights. As what Robert said, more sales are happening in freehold versus condos for obvious reasons. And more sales are happening in 905. Mind you, 905 is a vast area, but also where most of the affordability happens to be at this point. Toronto will always remain blue chip. There's always going to be demand in the 416 no matter what. Now, I guess, the market dynamics with lots of 416 condos on the market is completely opposite of where this is indicating. But, if you're looking to buy in 416, you're going to pay the price for it. And, you got to look for a good deal, basically.
Yeah, and the real thing there is the 60, it's normally 60-40, now it's 70-30. So there's a bias towards 905 and a bias towards freehold in the last couple of months.
Advice depending on where you're at with your real estate journey. We're in the midst of the fall market. So if you don't want to buy now, I mean, you're obviously waiting for motivated sellers that are going to look in winter time and you're going to make your middle of winter move. And of course, that's the precursor to the spring 2025 market, which is the next landmark to look after. But if any of our real estate chat viewers today, Robert, are buying or in the midst of the, traversing the real estate market now, which of within these 5 categories, how should they navigate this market?
They should be making offers. They should be making unconditional offers or conditional only on the smallest absolute necessity that they need to protect themselves with, because that's what seller wants. He wants a firm deal. Now, there's a tremendous number of both firm and condominium properties that are sold on condition. So they're not included in these sales that we're talking about. There's because we've switched from the previous system done under Stratus and the new system under Realm, I can't reliably make a comparison between now and 6 months ago and a year ago of the sold conditionals, because there's just too much of a variation between what it used to say and what it says now. So I can't really say, except I know that if I'm the listing agent, somebody comes in as conditional on home inspection and verification of insurance and confirmation of first mortgage, I'm going to give them 5-7 days to do it, because I don't have another offer. I haven't got 15 people lining out the door, so I'm going to take the one that's there. And condominiums are almost always conditional on status certificates. So if you're letting the person go for a week to get the status certificate, then give them the same amount of time for everything else that he or she wants to do. So it's you cannot buy something unless you make an offer on it. And what is it? What is the Wayne Gretzky parallel? You always don't get the properties that you don't put an offer in on. So put an offer in.
Put an offer, try it, right? And we're not telling you to be irresponsible and blow your budget away and buy the most expensive house. Be reasonable, do your
Take
research.
a poke at it. Take a poke at it.
That's right. Final words, Robert, for our real estate chat viewers.
The next 2 weeks, we're going to learn a lot. I'm having to guess a lot because I believe that we're on an upward trajectory. I could be wrong.
Price
I
and
think
sales.
so.
Price and sales.
Yeah.
Yeah, heading into October. So, and of course, more interest rate announcements are coming up between now and the end of the year. A couple of whispers of a half point, 0.50 point drop. So, I mean, if that
Well,
happens,
for sure, yeah, for sure we'll get 225s. For sure we'll get that. Whether we'll get a 50 now and nothing, or a 50 and a 25, who knows? But again, you look at the rates that come out from the mortgage brokers. 5-year fixed is at 425, and somebody's already at 399. So
there you go. It's coming.
the variables are higher because they're based on a different set of criteria. but they're going to come down so that the 5-year fixed and the
Right.
variable is competing with each other.
So if you want a chance at a lower price, I mean, wait till winter, see if if you get lucky, but higher prices, lower rates are ahead, generally speaking, in the market.
And there's always someone smarter than you that wants that thing a little bit more and gets a better job than you. And there's 3 incomes in their family. You only got 2. So don't be too smart. Just get the best thing for yourself and
Do what's right for
don't
you.
fool around. Just do it.
Do what's right for you. If you have any questions about anything we've discussed, leave it into the comments and make sure you follow along. Thanks for watching this episode of Real Estate Chat. We'll see you in the next episode. Take care and bye for now.
See you later.